Hi guys, so today we're going to look at a K-Combi question. So it just deals with the basic debit and credits that Kelly has already showed you previously. So Kate has set up a business and the following transactions have occurred. So what I would always do straight away is look at what's required of us. So part A says to record the transactions in K-Combi's ledger using T accounts and balance the ledger accounts of the 31st of March 2013. So straight away, once I see T accounts, I highlight it, so I know that I need to use T accounts to get the full marks for this question. The second part that asks us is to extract a trial balance as at the 31st of March 2013. So if you notice here, I've highlighted in blue, 31st of March 2013 is when we have to balance the accounts, just to make sure that I know what I'm doing here. So in the first working, on the 1st of March, Kate started her business with €50,000 capital lodged to the bank. So the bank account is a tricky one. It's the opposite to what you see on your bank statement. So on your bank statement, when money comes in, like if your parents pay you some money or if you get money from your job, it's credited on your bank statement. But on the other hand, if you pay money out, it's a debit on your account. So if you pay for something, if you go shopping and you pay for something, it's a debit on your bank account, or if you take money out of the ATM. But the opposite is the case from the accountant perspective. So with the bank statement, it's from the bank's point of view, but we're looking at it from our point of view. So from our point of view, when money comes into the account, we debit it, and when money leaves the account, we credit it. So if you look here, I've just highlighted in yellow. So we debit bank in, and then if you were to be crediting bank out, it would be over here on this side. So money in is debit, and money out is credit. So Kate started her business with €50,000 capital lodged to the bank. So it's lodged to her bank account. She's got it into her bank account. So money in is the debit, €50,000 on the 1st of March, debit on her bank account. Then the corresponding credit entry will be her capital account. So this is a liability now. Kate is now liable for this €50,000. So on the 1st of March, we credit her capital account €50,000 of her liabilities. So on the 2nd of March, Kate purchased €2,000 of stock paying by cheque. So if she's paid by cheque, the money is going to leave her account. So as I said before, money out of her account is a credit. So it's the opposite to what we see on our bank statement. So on the 2nd of March, her purchases of €2,000 taken out of her account, credited. The corresponding debit entry is the purchases, so it's an expense. She's paid for these purchases, €2,000. We debit our expenses always. Then on the 4th of March, Kate paid insurance for the current month of €125. So paying your insurance, it's kind of like really paying for your phone bill every month, your €30 a month. So that she's paid for the insurance, it's come out of her account, €125 is credited. So again, the opposite to what you see in your bank statement. The 4th of March, insurance. So insurance is an expense. She's not going to see anything back for that long term. So the debit entry, it's a debit expense. We always debit our expenses on the 4th of March. Then €125 in the insurance account, we debit it. So on the 5th of March, Kate paid rent for premises for March using a cheque of €1,000. So she's paid for her rent. The money's gone out of her account. She's not going to see it again. So we credit our bank account on the 5th of March, €1,000. And the corresponding debit entry is the 5th of March, €1,000 to the rent account. And rent is not an asset, it's an expense, because she's not going to see anything for this long term. She's not going to own a building after she pays her rent on this property. So we debit our expenses, €1,000. So on the 6th of March then, Kate bought a new car for €16,000 paying by cheque. So she's bought a new car. So this car is going to have a useful life. She's going to have it for a while. It's not like rent. It's not like she's going to have nothing from it. It's not dead money as such. She's going to have it. It's an asset to her. So she's paid for it by cheque. We credit our money in, €16,000 on the 6th of March. Credit, she's paid the money out, €16,000. And then the corresponding debit entry is on the 6th of March, her car account, which is an asset, €16,000. So we debit our assets. So you can see that I've highlighted in yellow there and in yellow up here, just to make it a little bit more straightforward for you. So we debit our assets and we credit our money out. And on the 9th of March, Kate paid rates of €400 by cheque. So again, this is similar to the insurance or the rent. Well, it's an expense now in this case, so it's quite similar to the insurance or like paying your phone bill. So on the 9th of March, she's paid rates of €400. The money is left her account, so we credit her bank account. So credit is money out, €400, credit. And the corresponding debit entry It's her rates account, so rates are an expense to her. She's not going to see anything out of that. They're just an expense going to the county council. €400 rates. Debit our expenses. So on the 15th of March, Kate bought €25,000 of stock on credit. So if she's bought this stock on credit, she's promised her suppliers that she will pay them at a later date. So she hasn't paid them anything yet for it. She's made an agreement with them to pay, but she hasn't done it yet. It's like you getting a loan from your mom for a night out. So on the 15th of March, €25,000, money out, her creditor's account. So her liabilities, €25,000. So we credit her creditor's account, and then we debit her purchaser's account. So before, you can see on the 2nd of March, when we did this earlier, she paid for the stock, so it went to her bank account of €2,000. This time it's her creditor, she hasn't paid for it yet, but it's still in her purchaser's account, it's still an expense. So €25,000 here, we debit our expenses, and then as I said, we credit our liabilities. So on the 17th of March, Kate sold goods for cash to the value of €9,000. So she sold the goods for cash. If she sold them for cash, the money is going to come into her account. So on the 17th of March, she sold these goods, €9,000, money is into the account, we debit it. So again, we debit, you can see the yellow entries, debit our bank in, money into our account is debited. It's very similar to like on the 1st of March when she got money with her capital that she lodged, she put it into her account, so it was debited. And the corresponding credit entry is her sales. So sales are a gain, €9,000, we credit our gains. She's made a gain of €9,000 so far. So on the 18th of March and the 25th of March, two things happened that are very similar, so I've put them in together just to make it a little bit more straightforward for you. So on the 18th of March, she sold goods on credit for €10,000. So if she sold it on credit, her debtors have promised her that they will pay her. So she is their supplier in this case. So she has sold it, her debit, her assets, €10,000. And then we credit our sales account, her gains. So she sold the goods, so her sales have increased, and her debtors owe her €10,000. And then on the 25th of March, a similar thing happened. She sold goods on credit for €5,000. So she sold them on credit, so she didn't get any money for it yet. It hasn't hit the bank account. We touch our debtor's account. So 25th of March, €500 is debited. We debit our assets. This is an asset to us. We'll get it eventually. And then we credit our gains, so sales account on the 25th of March, €5,000. So on the 21st of March, Kate paid an electricity bill for €500. Again, this is like the insurance or the rates. 21st of March, €500. The money has left her account, so we credit it €500. And then the corresponding debit entry is electricity account. It's an expense again. Every month it's an expense. I'm sure you've heard your parents complaining about the ESB bills all the time. The 21st of March, €500 is an expense. We debit our expenses. So then on the 24th of March, Kate paid for advertising of €240. So on the 24th of March, she's paid for the advertising. Again, it's money out of her account. €240 has left it. So we credit our money out. Corresponding debit entry is our expenses. So we debit our expenses always, so the advertising account is hit. 24th of March, €240. So advertising account, we debit our expenses. Now on the 26th of March, Kate received from customers cash of €4,000. So she's received this cash, so it's gone into her bank account. So when money comes into the account, again, we debit it. On the 26th of March, money has come into the account, so we debit it with €4,000. And the corresponding credit entry. So we credit our assets always. So our debtor's account, €4,000. So, we debit our assets usually, but her assets are increasing because she's received some of this money that she has owed. So on the 28th of March, Kate Conby paid suppliers of inventory €2,500. So this could be related back to before when she promised them, like say for this one here, 15th of March, she purchased €25,000 of stock on credit. She promised them she'd pay them at a later date. Now she's paying them €2,500, which happens to be 10%. So this could be, the terms of the contract. She could have promised them, I'll pay you 10,000 or 10% by the end of the month, and I'll pay you the rest in the next month or whatever. So on the 28th of March, €2,500 has left the account, it's credited, and then the corresponding debit entry is the 28th of March. We debit her creditor's account, so her liability is decreasing because she's paid €2,500 of what she owes. So she doesn't owe as much as she did before. So beforehand it was €25,000 that she owed, but now it's decreased by €2,500. So on the 30th of March, Kate withdrew €3,000 from the business for private use. So she's taken it out of the bank account. So she could be going on holidays and she wants to take money out. So on the 30th of March, money's left the account, so we credit her bank out. Money is gone out of the account, so we credit it. So €3,000 credited on the bank account. So the corresponding debit entry is her drawings account, so this is another expense. Bank account, €3,000, we just title it bank account so we can correspond it back. 30th of March, we debit our expenses of drawings account. So that brings us to the end of all the workings. We can just close off all our accounts now, so I would always leave this to the end just so that you make sure that there is no other entries. Like for example, this one that we just did, the creditor's account. We couldn't have closed that off because there was another on the 15th of March because there was more things to happen. On the 28th of March, she ended up paying for some of those goods. So I wouldn't close anything off until the end of the month. So here again, I've highlighted anything that's debit is in yellow and anything in credit is in purple, so it just makes it a little bit simpler for you. So the capital account as before, on the 1st of March, she increased her capital by €50,000. So then we close it off 31st of March, balance carry down with €50,000 and bring it down here to the credit side for the following month. So this will be the 31st of March, but it'll also be the 1st of April. So it'll be the opening balance then. So we do the same for the insurance account. So it's brought down here for the following month, another expense, rent account. So everything that's a debit is highlighted in yellow. And everything is pretty straightforward. So she's purchased these on the 2nd of March. Some of them she paid for, some of them she hasn't paid for just yet. And then bring these down here as well. So you can just take a look down through them. They're all very, very straightforward. It's very easy to close them off. Bank account is probably the most difficult one because there's a lot of workings in it. So we add up each side. 50 plus 9 plus 4 gives us 63. And then we add up all of these. So everything here totals less than 63. So we know that we still have a credit in the account. 31st of March, the balance carried down is 37,235. So that's how much is left in the account at the end of the month. So then we bring it down here for the following month. So 37,235 is what Kate will have in her account on the 31st of March and on the 1st of April. So on the 1st of March, she had €50,000 of the capital that she lodged, if you remember. Then the following month, this is what she has left. So we can move on to our trial balance. So our trial balance is going to be made up only of these figures that I have highlighted in yellow and in purple. So it might be a good idea as you're going down through your workings to start making your trial balance, and you can key in all these different bank accounts that you have or these accounts that you have hit. So bank, capital, rent, purchases. While you're going down through it, you can just highlight them in your trial balance so you know you won't forget anything when you come to the end. So first of all, our bank was a debit of 37,235. So I'll just show you that there again. Our bank was a debit of 37,235. So on a trial balance, it's a debit. And so everything is just done. Anything in debit. So these are all the yellow items on the ledgers here. So that's closed off all the yellow items and all the purple items. So creditors, for example, 22,500. So I was saying this earlier. She bought stock of €25,000. She only paid 10%. She paid 2,500 at the 28th of March. So what was carried down was €22,500. So she still owed €22,500 at the end of the month to her creditors. So let me just take a look at the trial balance then. We can close everything off. All our debits and all our credits should total €96,500. So then that's the only way we're going to know that we have done the question correctly. Once these two are both the same, I'll highlight them in red just to make sure we know. €96,500 debit, €96,500 credit. And then just to note, this is taken from the question. We can pop that in underneath to get the full marks. Closing stock at the 31st of March 2013 is €7,500. So that's the end of that question. I hope it's a little bit helpful to you. Now, debits and credits are a little bit tricky to get at the start, but if you just think when money comes into the account, it's debited, and when money leaves the account, it's credited in the case of a bank. With assets, we debit our assets, and we credit our liabilities, and then we debit our expenses, and we credit our gains. So expenses and gains are on the P&L, profit and loss account. And our assets and liabilities are on the balance sheet. I'm sure you're well aware of this by now, but sometimes it's easier. I often find myself going back to go look at the very, very basics and just write them out. I wrote them out before I did this question to try and help myself do it. So hopefully that will be a little bit of help, and good luck with everything.